In binary options trading, confirming the trend is essential for making informed and profitable decisions. A trend is the general direction in which the market or the price of an asset is moving, and understanding whether the trend is bullish, upward, or bearish, downward, is key to predicting price movements effectively. Confirmation of a trend helps eliminate the uncertainty around price action and increases the likelihood of success. One of the most popular methods for confirming trends is through the use of technical analysis, which involves interpreting price patterns, chart indicators, and market signals. Traders typically look for confirmation of a trend by using various tools such as moving averages, trend lines, and oscillators. One of the most effective ways to confirm a trend is by utilizing moving averages, particularly the simple moving average, SMA, and exponential moving average, EMA. These indicators smooth out price data to provide a clearer view of the market's direction. For example, when the price is above a key moving average, such as the 50-period or 200-period SMA, it generally indicates a bullish trend. Conversely, if the price is below the moving average, it suggests a bearish trend. Traders often wait for a crossover signal, where a shorter-term moving average crosses above a longer-term moving average, confirming the trend's strength. Another popular trend confirmation method is the trend line, which is drawn by connecting significant highs or lows on the chart. An ascending trend line indicates an uptrend, while a descending trend line suggests a downtrend. When the price bounces off the trend line and continues in the same direction, it strengthens the trend's confirmation. In addition to moving averages and trend lines, oscillators such as the Relative Strength Index, RSI, and Stochastic Oscillator can provide valuable insights into whether a trend is likely to continue. The RSI, for example, ranges from 0 to 100 and helps to measure overbought or oversold conditions in the market. When the RSI is above 70, it signals overbought conditions, which might suggest a potential reversal or a slowdown in the uptrend. Conversely, an RSI below 30 suggests oversold conditions, indicating that the market could be due for a reversal upwards. Volume is another essential factor in confirming trends. Increased volume during a price move indicates strong market participation, suggesting that the trend is likely to continue. Low volume during price movements might indicate weak conviction, signaling a potential reversal or a lack of sustained momentum. It's also crucial to wait for a pullback or retracement within the trend to confirm its strength. During a pullback, prices temporarily move against the main trend before resuming in the original direction. Entering trades during a pullback within an established trend can increase the probability of success. Moreover, confirming a trend should always be done in conjunction with risk management strategies, such as setting a stop loss and adjusting position sizes. This helps ensure that traders are not exposed to excessive losses when the trend turns unexpectedly. By combining technical indicators, chart patterns, and sound risk management, traders can confidently confirm trends and make more accurate binary options trades.